Hello everybody, welcome back to the channel. So today I'm going to be showing you why today's market setup looks very similar to what happened back in 2008, the GFC, Great Financial Crisis. And I will also be showing you some key indicators that usually mark the bottom in the stock market. If not the bottom, very close to the bottom. So if you guys enjoyed today's video, like, subscribe, all that stuff. All right, I'll see you guys soon. Bye for now. Hello everybody, welcome back. So today we're going to start with the most important thing, and that's the investor sentiment of the current market situations. So if you remember back in May, the week ending 25th of May 2022, 53.5% of the people were bearish. That means majority of the public is bearish, 20% of the people were bullish, 26.7% were neutral. And as soon as we finished this week, well, guys can look at the stock market today. The next week was green, big bullish candle that we saw, and that's why the next week 37% of the people were bearish. So always remember what Warren Buffett said: when everybody is greedy, it's time to get fearful, and when everybody is fearful, it's probably the time to get greedy. So when there's blood on the street, it's time to get greedy. So what are we seeing today, 15th of June 2022, this week? 58.3%, very close to 60%, okay? 58.3% of the people are bearish. We had even crossed the May reading, okay? So you guys can make your own decision what you want to do, right? But I'm just telling you, when everybody's fearful, maybe it's the time to get bullish, all right? So now let's jump into the SPY S&P 500 index, okay? And I'm just going to walk you through why I think that today's market setup looks very similar to what we saw back in 2008. All right, so watch this very carefully, and I'm going to point so that you guys can follow me. All right, so we had a peak, right? This was the peak. We had first leg down, we rallied. We had another leg down, we rallied a little bit, and now we are stuck here, okay? So peak, first leg down, second leg down, the third leg down. Basically it's almost happening, right? We don't know if it's going to stop here or it's going to stop here, or we're just going to go straight all the way down. And that's what we're going to learn from back, analyzing 2008. So all right, let's go back. And also remember, we are currently hitting 200 weekly EMA, and that's why we see the technical bounce today in the stock market, and it's not just falling straight. But always remember also, before we go, this trend line, we have just broken that trend line, okay? Now let's go back and see what happened back in 2008. All right. Here's the 2008 crisis, Great Financial Crisis. All right. So I did this, okay. Look at this trend line. Doesn't it look very similar to what we just saw, right? And I'm going to make it very easy for you guys. Okay, we saw the peak, okay? The first jump, the second, right? So we had a peak, okay? We came down, we rallied, we came down, and we didn't quite rally. So basically first leg down, second leg down, and we almost hit this, right? You remember that? We just hit that. Okay, we broke the trend line, and we had a technical bounce because of 200 EMA, right? But look at this. The first peak, or basically the first rally after the first leg down, it created a trend line. The second one didn't quite get to this, right? It fell short. Let's quickly look at what happened in today's market condition. Exactly the same thing happened. Look at it. We basically didn't get the rally all the way back to the trend line, right? First leg down, second leg down, we just broke the trend line, which I just showed you. All right, so what happened after that? Let's go back. So now if you look at it, what happened in 2008 was the capitulation move, okay? That's what I'm not sure about. I'll be honest with you guys. because nobody can tell you, right? If I'm going to tell you, hey, we're going to see this, and what if we don't see that, right? Nobody knows what's going to happen in the market. But we just saw exactly the same thing, okay? And also, I should point this out. Look at how many weeks were read before we got that, like kitty bitty, the jump. 1, 2, 3, 4, 5, 6. 6 weeks down, okay? What we got in today's market, 7th week down, okay? So not everything is perfect exactly same time, but it's already giving you an indication. It was 6 weeks down, we just had 7 weeks down. We broke this trend line, and what happened after that? Big capitulation move, okay? 20% plus down, 23% down, okay? And then the market rallied. How close would we be to the bottom if that happens? Let's say next week is a big capitulation move, okay? We just tank straight, okay? How close would we be? 20 in GFC, 20% crash more. But wouldn't you be kind of being very close to the bottom, right? You don't want to buy here and then see, okay, 50% more, right? At least if you buy here. So I think it's wise to just wait for next week. Either we're going to bounce straight from the 200 EMA that I just saw, that showed you on the market, and we just go back to the, maybe some other high and then see capitulation. But this is exactly so similar, right? This is so similar. We could see a capitulation move. So I want to wait and see what happens in the stock market next week. Either we're going to see a bounce or we're going to see this big capitulation move. It's going to happen. And when we're going to be sure like this is going to happen, or what's going to be a key indicator? Here's what I'm going to tell you. VIX, that's the one we got to keep looking at. The volatility index, okay? So if the VIX spike above 35, right? Right now we're in this range. If it spikes above 35 and just closes above, then I think most probably we're going to see a VIX, going all the way up to 50 or 60, and that's when we're going to see a big capitulation. And whenever that happens, we're going to be on the channel. So guys, like and subscribe so that you are staying, awake on this whole issue, basically, of the market. So I think that's what's going to happen. If the VIX spikes above 35, 36, then we're definitely going to see the capitulation. All right, so now let's jump onto the indicator that I think will show us either we are very close to the bottom or we are at the bottom. All right, so I'm looking at the S&P 500 stocks above 50-day average, okay? So we're on a weekly time frame, and just watch. I mark these yellow lines and vertical lines, and that's basically the bottom in the stock market in the past. Where are we today? We are currently at 1.98 rating. That means only 2% of the stocks in the S&P 500 are above 50-day average. Only 2%, okay? So what happened in COVID crisis? We saw that reading around 2.5, and then I think we went down to 1.6 something, or 1, let's say 1, okay? And then we bottomed, right? So we were very close to the bottom. Look what happened in February of 2020, 24th of February, and in the March, 16th of March, we bottomed, and then we just rallied. So we are very close. It's very hard to pick like exact bottom, like, okay, today you bought and tomorrow just market turned around and rallied, bam, 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 right? It's very hard to do that, very hard to pinpoint, but at least you can be very close, okay? So are we very close? Maybe, right? We are at 1.98. In the COVID crisis, it went down to around 1 point some rating, right? Let's go back, 2018, that's when the market bottomed. 17th of December, what was the rating back then? 6.3, all right? Let's go back. 2016 crash, okay? What was the rating? 12.38, all right? Look at this crash in 2015. We are almost close to 9. This is 18. Let's look at this one, 2011. What was the rating? 3.8. So still nothing less than 2. Even 2010. Actually, I just want to show you 2008. That's going to sum up everything. What was the rating back in 2008? We were at 1 or 0.8. Pick your number. You don't have to be so precise and exact. It's almost at 1. So are we, as soon as let's say we see that big capitulation move, right, which happened kind of like here or something, okay? We see that, and then we're probably going to hit that reading, okay, 0.89 or 1 or even less than that. or maybe we are already near a bottom, or we already hit the bottom. We're just going to go up from here. Who knows, right? But we are very close to situations happened back in 2008. All the stocks were down, 1% of the stocks above 50-day moving average, and then the market rallied. So you guys have to make your own decisions, right? I can't tell you what to do. So to me, it looks like either we are very close, or we just wait a little bit and see that big capitulation move. It's very important that stocks become cheap, right? People get that, because see, if you don't see that capitulation move, people are not going to enter in the market. Okay, if everything gets so cheap, the money is going to come back to the market. It has to come back. Doesn't matter inflation and all that. You're going to say, hey, we got this CPI inflation issue and all these kind of stuff. Yes, but market is always forward looking. Always remember that. Market is already looking way ahead of what we are thinking. Market is not reacting to current situation. It's already thinking what's happening 6 months from now or a year from now. That's what it's pricing in today. Okay, 75 basis points that the Fed just raised. Okay, market already priced that in. That's the reason it got bounced after the Fed meeting. So just always think about it psychologically, and I'm here to help you out. So alright guys, if you enjoy the video, like, subscribe, say it again, and I'll see you guys soon.